Shares of China's Zijin Gold International soaring close to 70% in their trading debut in Hong Kong. The company is the latest to launch its IPO in the financial hub that's well on the way to cementing its position as the world's top fundraising location. CNA's senior correspondent Wong with this report.
Hong Kong's glittering for China's Zijin Gold International with its debut listing on Tuesday.
我们在此相聚，共同见证紫金黄金国际上市的重要里程碑时刻。紫金黄金国际是紫金矿业海外黄金资产的核心平台。今天，我们再次鸣锣，预示着一个耀眼的黄金时代的
The company, the gold mining arm of Zijin Mining Group, raised $3.2 billion, making it the second largest IPO for Hong Kong this year. First was leading battery maker CATL with a $5.3 billion listing in May. This makes it the world's largest IPO since 2023. Aside from the traditional retail and healthcare IPOs, electric vehicle manufacturers have also looked to Hong Kong to raise funds for expansion. Just last week, EV maker Chery Automobile launched its $1.2 billion IPO in Hong Kong. It sells itself as the first Chinese automaker to export more than 5 million vehicles in a domestic market where more established names are being squeezed for market share by new players.
Because of this very tough competition, a lot of these firms, they will want an offshore platform to raise funds and expand overseas. So to me, this will be the biggest driver for all these companies, not only within the EV manufacturing sector, but also the related supply chain, such as the battery, the other technology behind producing this sort of EVs, and also the upstream material as well.
Economic conditions in Hong Kong are favorable for companies to list in the city. And with the ongoing US tariff cloud still hanging overhead, analysts expect Chinese corporations in particular to want to further diversify their operations.
They have changed their model not only through exporting from China, but also investing locally to build the supply chain in order to capture the market share. So with that in mind, then I think Hong Kong will be definitely one of the top locations that they would think of, because in the past, maybe the US market would give a better valuation, but they're still concerned on whether they are that welcoming to the Chinese firms with that regard. So I guess companies will always have a plan B. So even though some firms may decide that, okay, US is still the best location, but they will also have their exposure towards Hong Kong through listing here. So that I think a dual listing model seems to me is the best way for all these firms to diversify right now.
Leading Chinese companies have benefited from support from the China Securities Regulatory Commission to list in Hong Kong. And though Hong Kong continues to see a burgeoning IPO market, observers caution investors about being selective and discerning over the quality of corporations. This especially going into next year, where geopolitical risks are expected to increase. Wong, CNA, Hong Kong.